Hello everyone, let's get right to it. On July 4th, 2025, President Trump signed a massive new tax bill into law, something he's calling the One Big Beautiful Bill. Now you have to ask yourself, what does this mean for me, for my family, for my money? This law is a very big deal because it changes the rules of the game for almost every American taxpayer. It makes some of the tax cuts from 2017 permanent and adds a whole lot of new ones, fundamentally altering how much of your hard-earned money you get to keep. But it also comes with some very significant trade-offs that you absolutely need to be aware of. This is not a time to be financially asleep. You must be awake and aware. The core idea behind this legislation is to put more money into the hands of individuals and businesses with the hope of stimulating the economy. The way it does this is by permanently lowering the tax rates for most income brackets, which means you pay a smaller percentage of your income to the government. At the same time, it keeps the higher standard deduction. This is the amount of money you can subtract from your income so you won't be taxed on it, and having it higher means more of your money is protected from taxes right from the start. So, let's break down what is staying the same, but is now permanent. The individual income tax rates that were set to expire will now continue indefinitely. This prevents a tax hike that would have happened automatically. For families with children, the child tax credit remains at a generous $2,000 per child, which is a direct reduction of your tax bill. This is a dollar-for-dollar credit, which is the best kind of tax break you can get. These provisions were popular parts of the 2017 law, and making them permanent provides a sense of stability and predictability for your long-term financial planning, which is something I always talk about. But here is the denial you cannot afford to be in. While these changes sound great on the surface, and for many people they will be, this is not just a simple tax cut. This bill is a massive piece of legislation that also includes significant cuts to federal spending and a major increase in the national debt ceiling. It's a complete package of financial policies that will have ripple effects across the entire economy for years to come. It's a classic case of give and take. The government is giving with one hand through tax cuts, but it is taking with the other through spending reductions, and we must understand both sides of this equation. Now for the really big news, the part that could change your paycheck immediately. This new law introduces something truly revolutionary. Several types of income are now completely exempt from federal income tax. Can you believe it? First, if you work in the service industry, all the tips you earn are now tax-free. That's right, every single dollar you get in tips goes straight into your pocket without the IRS taking a slice. For millions of waiters, hairdressers, and bartenders, this is a monumental change that could increase their take-home pay substantially. It's a direct boost for some of the hardest working people in our country. The good news doesn't stop there. The law also makes all overtime pay exempt from federal income taxes. Think about that for a moment. If you are an hourly worker who puts in extra hours to make ends meet or to save for a big purchase, that extra effort will now be rewarded more handsomely. Your overtime rate is now your true take-home pay for those hours. This is a huge incentive to work more if you have the opportunity, and it could make a real difference for families trying to get ahead. This change directly benefits blue-collar workers and anyone who punches a clock, rewarding their extra labor in a very tangible way. Here is another game changer, especially for our seniors. All Social Security benefits are now 100% tax-free at the federal level. For decades, retirees have had to calculate whether a portion of their Social Security income was taxable, creating confusion and a financial burden for many. That is now over. This provides immense relief and financial security to millions of retirees who rely on this income to live. It simplifies their finances and, more importantly, increases their disposable income during their golden years. This is a promise kept to protect our seniors, and it will have a profound impact on their quality of life. Finally, the law adds a brand new deduction that will help anyone with a car payment. You can now deduct the interest you pay on your auto loan, just like you can with a mortgage. With car prices and interest rates being what they are, this could save you hundreds of dollars each year. For example, if you pay $1,000 in interest on your car loan over the course of a year, you can now subtract that $1,000 from your taxable income. This makes owning a car more affordable, and provides a tax break that reflects a major expense for most American households. It is a practical, common-sense deduction that many people will be able to use. Okay, we have talked about the good. Now we must have an honest conversation about the cost. Nothing in life is free. and these tax cuts are no exception. To pay for some of this, the new law makes deep cuts to federal spending, and the biggest cuts are aimed at health programs. Specifically, Medicaid and Medicare are facing significant reductions in funding. The law introduces new work requirements for some people to receive Medicaid benefits. The official estimates are stark. Somewhere between 10 and 12 million people could lose their federal health insurance coverage over the next decade because of these changes. This is a trade-off you cannot ignore. This is why I say you must be strong, smart, and secure. Not every change in this bill is good for everyone. If you or a family member relies on Medicaid for healthcare, or if you are approaching retirement and will depend on Medicare, you need to pay very close attention. The reduction in funding could lead to fewer services being covered or higher out-of-pocket costs for seniors and low-income families. While some people are getting a tax break, others may face a new and frightening reality of being uninsured or underinsured. It creates a situation of winners and losers, and you need to figure out which side you are on. Beyond the direct spending cuts, there is a much larger issue we all have to face: the national debt. This law is projected to add a staggering $3.4 trillion to the national debt over the next 10 years. That is not my number. That comes from the nonpartisan Congressional Budget Office. The tax cuts simply reduce the amount of money the government collects far more than the spending cuts save. To keep the government running, we will have to borrow more money than ever before. This is like putting a massive shopping spree on a national credit card, and eventually the bill always comes due. A rising national debt has real-world consequences for every single one of us. It can lead to higher interest rates in the future, not just for the government, but for you, too. That means higher costs for mortgages, car loans, and credit card debt. It can also put pressure on future funding for essential programs like Social Security and defense. We are effectively trading a short-term economic boost for long-term fiscal instability. While you might have more money in your pocket today, the country as a whole is going deeper into debt, creating a serious financial challenge for our children and grandchildren to solve. So after all is said and done, who are the biggest beneficiaries of this new law? Let's be very clear. Lower and middle income households will definitely see benefits, especially those who earn significant tips or work a lot of overtime. Those new tax-free income streams are a direct financial injection for working-class Americans. Families will also continue to benefit from the permanent child tax credit and the higher standard deduction. And retirees getting tax-free Social Security is a huge victory for them. There is no denying that many everyday people will see their tax bills go down, and that is a positive thing. However, the truth is that the largest benefits in terms of sheer dollars are tilted towards high-income households and corporations. Making the 2017 tax cuts permanent disproportionately benefits the wealthy, who saw the biggest rate reductions. Furthermore, the law extends very favorable tax breaks for businesses, such as allowing them to immediately write off the full cost of new equipment and research. While the idea is that this will spur investment and create jobs, it also means that corporations and their owners will be the biggest winners in this new tax landscape. It is a continuation of a policy that favors capital over labor. What does this all mean for you? It means you cannot afford to be passive. You must take action. Do not just assume you know how this will affect you. Your personal financial situation is unique. You need to sit down, perhaps with a financial advisor or using tax preparation software, and run the numbers for yourself. Look at your sources of income. Do you earn tips or overtime? Look at your deductions. Do you have an auto loan? See how the permanent tax rates and standard deduction change your bottom line. Only by doing your own homework can you truly understand the impact on your wallet. My final word is this: be informed and be prepared. This law is a financial earthquake, and the ground is still settling. For many, it will bring welcome tax relief and more money to save, invest, or pay down debt. For others, particularly those who rely on the social safety net, it brings uncertainty and potential hardship. And for the nation, it brings a heavier burden of debt. Your job is to focus on what you can control. Understand how these rules apply to you, make a plan, and take charge of your financial future. That is how you stay powerful in a world of constant change. Thanks for stopping by today, Hot Reels. If you enjoyed this video, don't forget to hit the subscribe button and give it a like. Your support helps us bring you more amazing content. Please stay connected with us on Facebook, Instagram, TikTok, X, Pinterest, and Threads for the latest updates and trending reels. Subscribe now and be part of the fun.